Hey guys, it's Imran back again. Just a little video explainer as promised about the VIX decomposition tool that is on the CBOE. We had one of our members asking about that and if I could walk through it and what it means. So I'm going to do my best to kind of explain that now. So let me jump in and share screen. So you can see here, you can go to the CBOE website and we've got this VIX decomposition beta in brackets tool. What it allows you to do is basically pick two dates, a from date and a to date, and it basically looks at how much the S&P has moved between those two dates, what the VIX did, and then it tries to break down that change in the VIX into its different components because the volatility surface is moving in certain ways and you can decompose those moves into different parameters essentially. Okay, so that's what it's doing. So let's start off decomposition factors. What's going on? So between the 20th and the 21st of November, we had the S&P rally about 1%. It went from 6538.76 up to 6602.29. Okay, so that 1% rally brought with it pretty much a 3 vol drop from 26.5 to 23.5, 2.99 points of drop in the VIX. Remember, the VIX represents the 1 month volatility. Okay, so that's using 30-day options pretty much. Now, sticky strike. So this is saying that a drop in the VIX, 1% move on the S&P led to a 3 vol point drop, which is about 11% drop on the VIX. So that's quite a big beta on the day, right? 1% move on S&P times 11 to get an 11% drop on the VIX. Generally, the VIX beta isn't 11, right? It's more around -5 or something like that. So it was a very dramatic drop on the VIX that day. So what happened? So you can see the sticky strike factor is coming out to be 1.19. Now, what does that mean? What does the sticky strike mean? Well, it means that if the volatility surface was completely unchanged and did nothing. So the implied vol of every single option on that 30-day expiry was completely unchanged on the day, right? The VIX still would have dropped by 1.19 because what we've done is we've gone from an at-the-money strike of 65.38-ish to a new at-the-money strike of 66.02. And what do we know about this surface? The surface is skewed. So we know that volatility is dropping as we go up. Okay, now I don't think we can zoom in on this chart because it'd be easier to see it. But the point is, yeah, we've gone from the black dot to the green dot and just riding down that skew before the vol surface has done anything would already mean a sticky strike move of 1.19. So the VIX just rolling down that curve, that's what they're calling the sticky strike move. So actually, it's not really a vol move. The entire sticky strike move is all about the S&P move. How much did the S&P shift up or down? And as we ride up and down that curve, where did we go? And how much did the vol drop on the way up in S&P? Or how much did the vol rise on the way down in S&P? That's before the surface even does anything. That's before the options market even changes. That's just riding up and down the skew. So that's the sticky strike move. Then we get the parallel shift. That's the actual vol surface move, right? So now I'm going to share our fixed strike monitor and show you what the December expiry, which is close enough. December expiry is close enough to the 30-day vol. This is what the 1-day move was on Friday. So the 50 delta options, which are the at-the-moneys, they dropped by around 1 vol point, okay? And we're seeing a sticky strike parallel shift move on this website of about 1 vol point, yeah, 1.13. So that's what they're saying. They're saying that sticky strike is just us riding along the curve and vol dropping because of that. Then the next thing is the parallel shift, which if all of the strikes across the whole surface dropped by the same amount, what would that have been? And that would have been what the at-the-money's basically done. So you can see all the at-the-money or close to the at-the-money's have kind of done the same thing because that is just the at-the-money vol. It doesn't really have any skew on it yet because it's too close to the money. It's only when we start to get into like 30 delta, 25 delta, and even beyond, you get a different move in the surface to the at-the-money because that's something else going on. That's not the parallel shift in vol. that is what's going on with skew and convexity and things like that, right? So the parallel shift in vol was around 1 vol, and that's what this at the money move has been. So that explains the at the money move. So we've got the sticky strike was riding up the curve. We've got the parallel shift with the at the money dropping by a vol point. Then you've got things like put skew, call skew, downside convexity, upside convexity. So they're breaking down the wings into put skew and call skew. I haven't read the white paper on it, but I'm gonna pretty much assume all they're saying here is the put skew is the difference between the at the money vol and the 25 delta put. And you can see what's the difference between the at the money vol and what the at the money vol did and what the 25 delta put did. Well, the 25 delta put moved by more. It went down by more. So that means put skew's actually going down. Okay, put skew going down. Look at it here. Put skew, it says, is down by 0.4. So it agrees with us that the put skew has gone down, which means that 25 delta area on puts going down even more than the at the monies. Okay. Then on the call skew side, it's saying here, it's saying call skew is actually unchanged. Whereas here, based on the difference between at the monies and my 25 deltas, I'm seeing that down as well. Okay. However, like I say, I don't know exactly what the white paper is doing here, but then on upside convexity, it's crushed it by 0.44. Okay. So it's saying 0.44 of a vol drop is accounted for by upside convexity. So some of this upside crush here, where we're seeing these 5 deltas getting killed, this upside is being represented by the VIX decomposition. This upside drop is being represented more by upside convexity than it is by upside skew, basically. Okay, so that's there. And then lastly, the downside convexity is kind of this 5 delta stuff here is not dropping by as much as, say, the 25 delta put area. Okay, so there seems to be a bit of an uptick in that really, really deep downside stuff, which actually is would be an increase in the VIX. And that's why you see a 0.22 positive there, where the downside convexity is being supportive to the VIX, even though the overall VIX is coming down because of all the other parameters, right? But so on the day, that 3 vol point drop mostly gets captured by sticky strike riding along the curve, parallel shift by 1 and a bit vols, and basically you could argue it's like a bit of wings getting smashed, which you can kind of see here, which they're calling put skew and upside convexity, where that wing gets hit, that wing gets hit, and that means VIX has dropped even more than it would have done on a parallel shift. All right, hopefully that made a lot of sense. Tofu, I'm talking to you because you asked the question. Let me know if you've got any questions, but that's how I would kind of break that one down. All right, cheers, guys.
Hey everyone, real quick before the sale ends this week, my Ultimate Options course is 30% off for Black Friday. Normally $999, now it's only $699. One-time payment, that's it. The deal dies on Sunday night. Look, this is not some get-rich-quick thing. Options will punch you in the mouth if you treat them like lottery tickets. What this course actually does is take you from zero to being legitimately dangerous with options. Fully intuitive understanding, not just memorizing strategies. You'll get case studies of real trades that I've done over the year, wins and losses, Greeks explained so they finally click instead of feeling like your calculus homework, and how to look at an options chain and have a gut feel for fair price even before you pull up the model and look at implied volatility. And lastly, practical setups that I still use today within the trading community with rules and not hope. If you ever wanted to actually understand options instead of gambling with them, this is the cheapest it will ever be. The link is below. Grab it or don't. Either way, trade safe.